I'm John Heiser here with Bob Snyder.
Hello, hello.
What we thought we would do is Bob and I are going to record a video series for the CRE Playbook because Bob is exactly where I think most people who want to get into this are. Bob has a very impressive residential business, has spent a lot of time growing it, and I'll let him get into that, and is trying to jump into commercial real estate. So,
All right.
perfect way to kind of record and teach people how to do this.
Perfect. Yeah, I'm in the Cincinnati, Ohio, and Northern Kentucky market. And so right now I've been an active realtor agent for the last 16 years, run a family operation with my father. So we do 100, 150 deals a year through our sub office underneath our broker, traditional residential deals. So that's our bread and butter right there. And then about 5 years ago, we moved into the investor space and started doing fix and flip residentials. So that business has grown very quickly for us, and it's become a very profitable part of what we do. And so we're doing anywhere from 6 to 10 flips at a time, and got multiple crews running, making that happen. Um, we also got some buy and holds, some smaller residential multifamily stuff. So that's where I'm at right now. And through meeting John, it's become one of those deals where it looks like it's time to bigger, better deals. Nothing wrong at all with the residential flips, but you add some zeros to those and they look a lot more fun. And John looks like the guy to take me to those zeros. So here I am.
Well, that's what I was going to ask. It sounds like you're doing a really great job residential. I personally totally get wanting to move to commercial, but I think it'd be interesting to. You said a little bit about that, but what is it that's making you? Are you talking about switching entirely? Do you think you just want to pick up a couple commercial deals here and there? Where's your head at?
So yeah, I don't know that I don't have the knowledge base to switch entirely yet, right? That's kind of why I'm here at CRE Playbook, is to build on that knowledge base. Um, I think the best way to say is I'm looking to dabble to get started. I'm looking for that first deal. I'm looking to see how it goes, see what I like, and obviously I want to be profitable. If we're doing a value add fix and flip on a commercial building, that lends into doing another one and another one. If it's long term hold stuff, it becomes all right, what kind of systems and processes is going to put in place to manage multiple buildings on the commercial front versus the residential front. So for me, I don't want to say I'm switching all the way, because I don't think that's the game plan. Will I transition out of being a realtor? Absolutely. Already in the process of doing that in my residential flips. So does this segue into full time investing? I think so. Um, getting out of that day to day job of chasing buyers and sellers and into the day to day job of looking for deals and building a life where I get to control what I own and what I buy and the processes I get into versus chasing a client. So I like chasing deals more than people, put it that way.
Yeah.
So yeah,
I love that.
yeah.
That's huge. And I find most people have some level of pain in their day to day that's pushing them to kind of look
Hmm.
into that. Sounds like yours is more on the retail side of it, which I
Correct.
totally get. Um, and yeah, you don't have to do this full time. As we're going to talk about, you can get one big, nice commercial deal and it can completely change both your current cash flow situation, your family's net worth,
Right.
retirement, all the above with one deal. So,
Yeah. And I got a feeling if I
well,
like that first deal, there's going to be many more behind it, but got to get that first
yeah.
one under the belt.
Oh, for sure.
Yeah.
Yeah, for sure. Well, I think one of the things I've noticed talking to folks who want to get into this is I don't know if it's like you, but when I first got into residential, I just browsed on Zillow every night. I didn't know what I was looking for and
Right.
didn't know if a house was a deal or not. So I run into people that do the same thing for commercial. They're just browsing on Crexy or LoopNet or whatever their choice is, and they just don't know what a deal is. Is that kind of where you've been?
Yeah, so I mean, I've gotten to the point now. Obviously, growing up in the residential space, I can evaluate a house pretty quickly. Um, it doesn't take but a couple minutes for me to evaluate and put a price tag on a house. But you get into commercial, and there's so many more aspects to it. The category classes are daunting, really, trying to figure out what I'm looking at. So should I be looking at high rise, multifamily residential? Should I be looking at flex space? Should I be looking at industrial? Should I be looking at restaurants and standalones? I get on Crexy and I'm looking at it like, all right, I can buy a Chick-fil-A, right? Chick-fil-A building for $6 million
Mm-hmm.
and just let it sit there and triple net and never touch it. How the heck do you make money with that, right? So all this stuff is
Right.
extremely intriguing, but what do you do with it, and where do you start?
Yeah.
So it's a different language, it's a different model. That's kind of where that's the part that's held me back over the years is simply not knowing the language in a lot of ways, of even how to evaluate or look at these buildings. So
Yeah. Well, that's awesome. We'll definitely can help with that. And to your point, yeah, you can just be aimlessly looking every night, but is that helping you get closer to your goal of getting your first building? Absolutely not.
so
And
far it is not. So far it is not. So because I've been
yeah,
doing that.
well, we
So
can narrow that down. And this is through trial and error, I've kind of figured out two different buy boxes that I really like, and they're still broad enough that they can fit in any market. You're right, asset classes can be scary. I mean, there's a huge difference between a
hmm
retail business with a Dollar General in it or a standalone versus we looked briefly into buying an assisted living facility a couple years ago, and that is a completely different business, one that I learned
yep.
I don't want to be into. Um, and
I looked at
so,
those for a while, and I
yeah,
could not. I had multiple meetings with an operator, and I couldn't make those work. If you
yeah,
can,
yeah. The
I couldn't.
revenue is huge,
So
but the expenses are also
right,
huge, and
right,
they're very
and the
operational
turnover,
heavy.
the turnover
Hmm.
on the clients is yeah,
Yeah, the insurance is nuts, but
not for good reasons either.
yep, yep, true, true. So I've kind
Yeah.
of developed over the years a couple buy boxes that I think will work for folks trying to get in, and I'll
Okay.
tell you what they are, and then tell you why I like them. But I kind of have two boxes, and I put them in the buckets of a commercial fix and flip, is what I call the first bucket. The second bucket is basically a stabilized, I'll call it business to business asset. We'll start with the commercial fix and
Okay.
flip. So in the commercial space, we call that a value add. But I think it's useful to think about it just like a fix and flip. You've done a ton of fix and flips. You've got crews. I talk to a lot of retail or residential investors who are
Correct.
in the same boat. And if you look at it that way, it's probably going to be a heck of a lot easier to get into it, understanding that you can think about it very similarly to residential. Now, what I really, really love
Gotcha.
the kind of in the commercial space, this is an introductory price point, but I love for both of these buy boxes, I love being in the 500,000 to kind of $5 million range. And, there's some fudge room on either side of that range, but it's a really, really awesome space to be in, I think, for a lot of reasons. One, like you just talked about, there's a whole residential is super competitive, and in a lot of markets in the U.S., pretty much every market at this point, you're going to have
Correct.
competition. I'm sure you fight for your fix and flips with a bunch of other rehabbers. Yeah. And it
Every
does
day.
exist a
Yep.
little bit in commercial, but nowhere near at the level it does at residential. And it's not uncommon to see properties sitting on the market, 6 months, 1 year, 2 year, 3 years. It's not uncommon. And so there's just a lot more out there, and it's way less competitive. The nice thing about staying under 5 million is there is a bunch of really, really sophisticated competition within commercial, but for the most part, they're playing above that $5 million price
hmm
point. And they're institutional buyers, they're big syndication funds, and
Gotcha.
they're professional. They've been doing this for a living for a long time. They say a bunch of fancy words. They've got great broker relationships. You're not probably going to beat them for 100 unit in Austin, Texas, on a deal. Yeah, they're going to get it before you if it is a
Right.
deal. If you do end up getting a deal like that put in front of you, it's been passed over by 10, 20, 50 syndicators. And so is it really a deal? Probably not. But I find in that lower price point, especially in markets like
Fair enough.
yours, where you're a known entity in that market, it's a good sized market with a lot of business happening, and it's appreciating, it's growing, but it's not New York,
hmm
LA, except Dallas, etc. Um, you're not going to have a ton of competition in that space, and you can become a go-to guy for these smaller brokers and agents playing in that space and really start to make a dent in your market. So that's the price range. Yeah, and I think that works for basically anyone I would recommend getting into this space.
So do you keep that? Do you keep that same 500,000 to 5 mil price point for both the stabilized assets and the fix and flips
I
for the
do.
value adds?
Yeah, I do, especially for your
Okay.
first couple deals, and then you can start looking at larger deals. I don't really like looking at deals less than 500, and to be honest, probably the lowest I've done is maybe like 800. But there's
Is
some,
that because they just not enough profit margin, or they become too low end, like Class C buildings, or
yeah, a little bit
just
of
both,
both.
all that combined?
Yeah,
Okay.
a little bit of both. They're either in severe disrepair and not necessarily worth looking at, or they're such a small
Hmm.
building. You get into the same problem that you have in residential, that you're doing all this work
Right.
for a property that's not going to make you a bunch of profit margin. So,
Yeah, there's just not enough square footage to do anything with it. Yeah,
yeah, yeah,
I gotcha. That makes sense from a residential standpoint completely.
yeah.
So, yeah. So is it best to keep my mindset similar to what I'm doing on my fix and flip models for residential and carry that over into commercial, or do I need to kind of reset a little bit and figure out a different way to think about these? Like, where should my mind be on all these?
How big a rehab are you doing in residential right now, on average?
Average, well, it's house to house, but we're somewhere in the 25,000 to 50,000 is our norm in that ballpark. So, if you had to pick a number in the middle, it'd be 40 grand.
Yeah,
It's pretty average for us.
yeah,
So we buy low end. So it's ARV of 300 and less on our fix and
yeah.
flips.
Got it. I think that puts you in. So I kind of call it for commercial a mild to moderate rehab. That's just a made up. There's no numbers attached to that, but
Right.
obviously
Yeah.
the numbers will be different in commercial. But I think that's kind of right in with the style rehabs that you're doing. I have done bigger conversions, but I really now view those more as developmental plays. You can definitely do that.
Okay.
You can definitely get into that. It's its own industry essentially, and I wouldn't try it for your first couple ones. But
Fair enough.
any building that needs the stuff that you're used to, cosmetic, flooring, paint, redoing bathrooms. They don't always have kitchens. It can need plumbing work. There's a couple other unique to commercial things like fire suppression, etc., that can sound really scary, but as long as you budget for
Right.
them, there's plenty of subcontractors that can do really good work there.
So in my residential space, I look at the mechanical stuff as, especially like HVACs, roofs, and things like that, to where I get to call my contractor and say, "Hey, jump on this job for me," and I pretty well know my cost, or I get a bid ahead of time, whatever. But I look for those because it's easy. It's a one call solution for that problem for me. As long as I get the price down to cover it, that's the easiest thing in the world. Is that going to be similar in the commercial space in a lot of these ways for HVACs and roofs and stuff, or does it get more complicated?
Yeah, it can get more complicated. I think if you're staying in the sub $5 million price point, most, not all, but most commercial properties will have similar HVAC units to what you're used to, but probably just
Okay.
more of them. So they'll have it kind of goes up to 5 ton. 5 ton is the most common I see in these size buildings.
Okay.
And in general, in that price point, you're looking at a 10, 20,000, 40,000 square foot building. Potentially the largest I've gotten in this price point is about 83,000 square foot. I'm sure you can find some 100+ thousand square footers in this price, but I'm not sure that I would buy them. But yeah,
Fair enough.
the others.
There's a bunch of them out there. I've been looking. Yeah.
um,
I don't know what to do with them, but
True. Electrical can be a little different. You've got different amperages and different ways buildings are set up and transformers, etc.
Mm-hmm.
So I did once I switched over to more commercial, found some higher level electrical folks to work on my buildings. But once you found a good, reliable one of those, I think that's really the only of the major subs that needs to be different. Yeah, for commercial.
So electrical, yeah, and that's going to be pretty much depending on who the tenants are in the building, right? I mean, that's
Yeah,
or what type of building we're getting into, asset class
right.
wise. So
Yeah.
okay, yeah. Like we're getting in office spaces, I'm not getting anything crazy, but if I'm in the warehouse space, it may be totally
Oh
different, right?
yeah, different amperage, different
Yeah.
transformer requirements, different power requirements. Yeah,
Okay.
and you could even, I would recommend, especially if you're new, walking it before you buy it with an electrician, so they have a good understanding of what its current situation is, how much power it's drawing, how much it needs, and
Perfect.
I think it's worthwhile add on for sure.
Good. And so when I, just from the basics of basics things, right? Just getting started in this. Do I look at this the same way? When I go to buy a residential house, I run all my comps, I get all my numbers together, and then go out and walk the house. Um, Check it all out, make all my notes, crunch my numbers, make the offer. What's the time frame looking like in a commercial purchase? I guess.
That's a great question. It's definitely slower. It's kind of nice. I mean, I
Mm-hmm.
don't know about you, but I'm used to, especially on flips. Sometimes you have a lot of competition. You got high pressure. I got to close in 7 or 10 days. Or I'm not
Right.
going to get this house. That doesn't
Yeah.
exist
Yeah.
much in commercial. Not that it's totally
Okay.
gone, but I would say 3 to 6 months is the average purchase time. So you got
All
plenty
right.
of time, and
So I'm trying to do closing to closing of a residential in that time frame. So
right,
yeah, that's just to get it bought. That's much slower.
yeah.
So
That's great. It
yeah.
gives you plenty of due diligence time. The other thing that you're going to need time for that we'll talk about probably in a different day is funding. And so most sellers are expecting
Hmm.
that you're not going to have $5 million of your own cash lying around. And so they expect that you're going to have to go out and get
Right.
funding, whether that's a mix of bank debt and private capital or however you're setting that up, which we'll get into. All that takes time. And as long as you build it into
Yeah.
your purchase timeline, it doesn't have to be stressful.
Yeah. That was going to be a whole another conversation. I have a feeling on how to finance these deals. Yeah. I
Oh
feel
yeah,
like there's a
yeah.
lot to learn there. Yeah.
It'll be a good one. Definitely. Let's talk about asset classes because I don't think we hit
Okay.
that yet. I
No, not.
I personally really like a mix of office, retail, and industrial. Second tier that I have done, and I know a lot of people love, is storage and multifamily. And it's just what fits
Hmm.
me, and I'll get into why. And it's really, I threw this term out earlier, but B2B, business to business. So I know my strengths and weaknesses.
Right.
Like you said, I love looking for deals. I love finding the next deal. I like structuring it. I like funding it. I like that huge rush when you close on it. What I don't, I can force myself to operate it, but I don't love operating it, 2 years down the road after I've owned it
I'm a
for a
hundred
while.
percent in the same boat. That is me to a T right there as well. Operations, the day to day tasks are not what I enjoy. It's the hunt. It's the finding the deal. It's figuring out. I'm a
Right.
problem solver. Is where my strength lies. Is taking a deal that shouldn't close and figuring out how to make it close and make everybody happy and
Yeah.
make that thing profitable. So it'll be fun to pick your
Yeah.
brain in the same manner of working that out. So in that regard, how
Yeah.
do you partner with operators? Do you hire it out? Do you do property managers and put them in charge? Pay them off? How does that work in the commercial space?
So I've done a little bit of everything. For your first deal, I would recommend trying to keep at least some of it in house so you understand it. So, for example, on
Yeah.
our one of our office buildings that has 35 tenants, we have it has enough tenants, it has enough cash flow to afford an on-site property manager who she's kind of there Monday through Friday. She's making sure, kind of doing the asset management, making sure it's clean, making sure there's no trash, making sure people aren't doing
Hmm.
stuff inside the building they're not supposed to. And
Right.
she's the first point of contact for the tenants. And she also makes sure they pay their rent on time, and she follows up with folks when they don't. So very much kind of like a standard property management person would do. And she's
Hmm.
purely dedicated to our building because it's large enough. So that's the other nice thing about commercial. If you get into slightly larger deals, is you can have someone who really cares about your building because their livelihood depends on it. Same thing in multifamily. Usually, if you get to about 40 units, they say is when you would have potentially a full-time property manager. In the kind of space below that, you may have a more of like a portfolio manager who's driving from a couple different properties
Hmm.
throughout the week. And that's the nice thing too about getting scale. After you get a couple of these, you can have one manager kind of manage your portfolio or drive from property to property. But both of those and storage too can be fairly management intensive. So I've got a couple of storage facilities. The larger one, I have a private property management company. All they do is storage, and there's 2 full-time employees dedicated to our building, but that's the 83,000 square foot
And
building.
that's through that company
Yep.
that's managing it for you.
So I didn't hire
Nice.
them.
Okay. So you don't have to manage those 2 employees at all
Correct. Yeah.
yourself.
So I consider it asset
Okay.
management. I just manage the property manager. Like anything else, if you ignore them for too long, they may not be doing things the way that you want, or they may, not be leasing out the building as well as you prefer. But that's the larger one. I do have a smaller storage facility that's 16,000 square foot that is not big enough for a separate company. And that one, I have a kind of part-time property manager who's also a contractor who kind of runs it for some extra cash kind of situation. Yeah. That one is a little bit more management intensive. I meet with him every week and kind of have to make sure that he's doing the things that are needed. So that's just something to keep in mind because storage is a business for sure.
So is it easier to go in that smaller route or on your first deal, or is it easier to bump up to where you can hire these property management companies and put people in place? What would you consider the best route for a guy like me who's looking for his first deal?
That's why I really like retail, industrial, and some forms of office. If you can get a true business in place that is a real business that has a P&L, that knows what they're doing, that's signing a professional lease, they don't need any management at all. Got a couple industrial buildings, and I talked to the on-site manager who works for the industrial company maybe once a quarter, and I have no responsibilities for that space at all. That's a triple net tenant. We can kind of get into triple net or gross leases at a much more in-depth later, but the short version is triple net is the tenant is responsible for rent, property taxes, insurance, everything, utilities, basic repair and maintenance of things that break a lot, plumbing, HVAC, etc. Now that depends. You got to look at your lease. But for this particular building, I'm responsible for essentially the structure, roof, structural issues, building improvements if we want to expand, etc. That's all on me. But everything else is on the tenant. So toilet breaks, they don't call me. They call a plumber. They fix it. They pay for it. They move on.
So this is going to be your big boy. So this is the Chick-fil-A that you're looking at on those?
Yeah, I would even consider that a step up. I would call that an absolute triple net, where like Chick-fil-A, as I'm sure you've seen around you, they'll remodel a space for $1 million, $2 million, $10 million, whatever, and they're not asking the landlord to pay for that. Chick-fil-A is a little unique because they're usually land leases. I don't get into that too much, but I think maybe Starbucks is a better example. But Starbucks, for example, they usually sell at like a 4 cap. We'll get into cap rates, I think, at a different time. Basically, that's like buying a bond, right? So if I'm a landlord who wants to buy a Starbucks and I want to spend $6 million on it at 4%, I'm just going to pull up a little side calculator here. I'm buying it at that level, only expecting to make $240,000 a year on my $6 million purchase. That's not a ton of money for $6 million. But
not on $6 million now.
Right. But I'm doing that because it's super, super safe. They're never going to call me. They want to remodel. That's going to be on them. They've got probably a super long lease, 10 years, 15 years, 20, up to 25 years potentially. So there's not much things out there more stable than that. But you can't expect to, make a huge return. So what I really like about the industrial space in particular, but retail too, office to a lesser extent, but still in the same category, is you can get triple net tenants who are paying their insurance taxes, etc., but they're not some big giant company like Starbucks. They're a healthy company that knows what they're doing and has a finance department, etc. But they, you can buy those buildings at maybe an 8 cap, or if you get really creative, higher than that. But if you want to take that
Okay.
same $6 million example at an 8 cap, that building would make 480,000 in annual revenue as opposed to 240. So
Nice.
big difference.
So what order should I start looking at them? Should I be looking for that office flex space first, and then how do I walk it down from there? Where should I start? I guess is the best way.
Good point. I didn't mention flex because it's kind of in between industrial and office. I really like flex
Okay.
because it's a little bit of best of both worlds. I think that's a great place to start. So I would kind of start in that flex industrial space. I think you're gonna, and especially, I don't know, especially from what I know about your area, you know better than me. If you've got a ton of industry like that, the demand for that kind of space is really high. And one of the things that we can do for you, and that we can do for anybody else, is, and look at different asset class demand for your area. So maybe storage is saturated in your market, but maybe industrial has a really low vacancy rate and the rents are really high. Maybe office is
So where do we
less
find that info
desirable.
on vacancy rates and things like that?
So I typically find it I have a CoStar subscription, so I can look that up
Okay.
for you. If you don't have that, which I definitely didn't until I bought more buildings, you can ask. I would suggest making friends with local brokers in those asset classes. You'll find that there's industrial only brokers and retail only brokers
Gotcha.
and etc. And they'll know your market super well. Obviously, they're going to be biased. So if you ask an industrial
Yeah.
broker if you should invest in industrial, they're going to say yes. But if you ask them for numbers and then compare that to numbers from the other asset classes, you get a better idea. I think the more you start looking at these, you'll start to pick up what's doing well and what's not in your market.
Gotcha. So where do we go from here? What's the next step on getting me started?
So we talked about the fix and flip model. Let's talk about stabilized really quick, and then we can jump into looking for deals.
Yeah.
So the second buy box I like to call business to business stabilized. And I really think if you add creative finance into it, which I recognize is another level of complexity, you can start to get some really amazing deals. Because if you just, and we'll see when we start going out there and looking, if let's say you find a 8 cap industrial building that you really like, awesome. But guess what? We're recording this in January 2025. I've been looking at cash out refinance commercial loans, and they're, the best I've seen is 6.5%, but more commonly I'm seeing 7% still. And it's going to be hard to make something like that cash flow. So let's just use our $6 million
Right.
example. So let's say you wanted to buy that building outright. A commercial bank may want you to put at least 25,
Right.
but maybe 30% down. Let's say 25, just to keep that. So they're going to want you to put $1.5 million down. So then you get a loan for $4.5 million. The average bank is going to amortize your commercial loan over 20 years instead of 30, which really hurts cash flow. We'll show that. But if you are at a 7% interest rate on $4.5 million, that's a $34,888 a month. It's basically a $35,000 a month payment for $420,000 a year. And back to the cap rate, we said on a $6 million building, if it's an 8 cap, it's spitting out $480,000 of income. That's hopefully after expenses. And so with that $420,000 debt service, that means you're only making $60,000 a year on a $6 million building. That's about it. Right. And so that's a lot of risk. And so that's a ton of risk to put in to have that kind of return. So that's why a lot of these deals are just sitting, because debt is not cheap right now from banks, and maybe it will. Let's actually take that same example and say it was a couple of years ago.
Absolutely.
This may hurt to do, but we'll say you get at a 4% interest rate. That's a $27,000 a month payment. So that's $324 a year. So now you're making $160,000 a year. So it's an extra $100. Still not. And you put down 1.5. Let's just do some quick cash on cash. So that's a 10, 11% cash on cash return. Whereas before, your cash on cash return was, let me just do it. And this was 4%. So I'm not doing any deal for 4% cash on cash return. 10, 11 ain't perfect, but it's getting closer. So that's why stuff's sitting on the market. So what can we do about it as a small time investor? Offer these sellers creative finance. And are they all going to say yes? Definitely not. But I think you'll be surprised, and I know you already have because you've had some of these conversations. People are expecting a little bit more seller finance, kind of creative finance offers in the commercial space than they are residential, and they don't say no to it always. And so they'll at least get back to you and have conversations with you. And especially if you think about it, like who are the sellers of a $500,000 to $5 million commercial building? Well, they're not some big institutional fund.
Right.
They're far more sophisticated, thankfully, than your average seller of a residential property. They know real estate, they know numbers, so they're not going to just give it to you for free, although we've gotten some really good deals. So they know how to do this math, and they're more familiar with the concepts, and it's not completely foreign to them. So it means if they're in a situation they can do it, they're much more likely to take a deal like that. So you can very quickly take a deal like this pretend $6 million industrial building we're talking about, and you can make it cash flow just by getting somewhat favorable creative finance terms on it. And basics, I think we'll do.
Right on. It seems like in my residential game, the sellers that are willing to entertain and look at seller financing are more serious. They're typically owning rental properties in a lot of them, and they are looking at it more as a business than I bought this and don't know what to do with it. It makes money, where I would assume that's going to be the similar in that 500 to 5 million range. You're going to have very similar. I bought this building and ran my business out of it. We shut the business down now. I don't know what to do. Kind of people. So I think it should be a similar mindset in that regard.
Yeah, and I would say to anyone watching this, or to you, if you don't have to understand creative finance super well to start having these conversations. I think it's as simple as just asking brokers and agents if you're looking at on-market property, if their seller would entertain a seller finance kind of option. And if the answer to that question is yes, the next thing you should ask is a couple things. You just want to know, you don't want to just throw a bunch of numbers together and send it to them, because they're going to say no, and you're not going to know which number they didn't like. And so what I really like to ask is, what kind of down payment would your seller need to do a seller finance note? What kind of monthly payment is your seller expecting to get after we close every month? And what kind of terms are they looking for? I don't always ask interest rate, although with this kind of more sophisticated seller, it's going to come up. Don't expect to make it to close at a 0% without having talked about it. I have done 0% in commercial, but the seller specifically,
which is wild to me, but
the seller specifically wanted it.
You say it all nonchalantly, like that's normal. Like that's not the most amazing deal ever.
It's an amazing deal.
I've done 0%, whatever.
But he knew what he was getting into, and we gave him a higher purchase price, and that's what he cared more about. So that's really what you want to know. What does your seller care about? Purchase price, down payment, monthly payment, and what kind of how long would they potentially want to be in this kind of deal? And we can get into in another video how I kind of shake all that down. But and it's all about what you want. In a perfect world, what I would want is to get into it with a low down payment, a reasonable interest rate. And if I can stretch that amortization from 20 years to 30 years, which should be pretty familiar from the residential space to your sellers, I'm making that annual debt service way lower, and now my building's cash flowing. And I may be the only person that's able to offer the seller that, if no one else is thinking about this. And And so it just makes being able to do a deal much better. And I'm going to back up a second.
Yeah, it seems like that's another barrier I've looked at over the years of looking at, scrolling through Zillow, scrolling through Crexy, wherever, looking at these commercial buildings. And like, how the heck do you play at this million plus price range without having $1 million free cash in the bank? You know, and that's been a huge mental shift for me is, you don't have to use all your own money
Yep.
or hardly any of it.
Yep.
And that's the game changer in the commercial world is getting through that for me is getting my head past well, as soon as I get $1 million in the bank, I'll go look at a commercial building. Why
Yep.
wait?
Yeah, you don't have to do that. The first deal we did, I had a more conventional lender, and we had 2 private capital partners who put up equity that we had a previous relationship with, and we got cut a check at close to do the rehab. And everybody knew it, and everybody was okay with it, and it was awesome. So definitely can be done.
Yeah, absolutely. Absolutely.
I did want to. I know I've kind of thrown out the term stabilized, but I don't think I fully clarified in this buy box. We're talking about properties that already have tenants. They don't have to be perfectly 100% occupied, but they're already cash flowing essentially. Typically, you're going to see occupancy rates somewhere in the 70, 80, 90 plus percent if they're trying to market the building as stabilized. But it basically just means the sellers positioned the building well for sale, and they're trying to get maximum value for the building, as they should. But what you'll see is if that building's been sitting on the market, it's because, like we just talked about, a new buyer can't get a good enough bank rate to make the building make sense. So the longer it sits on the market, the more likely, even though they have a nice building that's cash flowing, they may be willing to sell it to you on seller finance. And you can get into a building day one that's cash flowing, that can already start to make you money at a reasonable debt service. So that's why I love those deals. They may not, you can make $1 million on the sale plus of a commercial fix and flip in this price range. You may not be able to do that you may not be able to do that on a stabilized creative, but you can instantly give yourself $5,000 a month cash flow, or $10,000, or whatever number you want. And to me, that's just as important to have reliable income coming in every month.
Absolutely. My world, I look at, because I'm doing the same thing in the residential market, right? I got my fix and flips that make good chunks of change. We typically look at 30 to 50,000 in revenues on those on profit margins, and then I also have building a rental portfolio to do the same thing in residential properties. And I feel like that aspect carries right over to the commercial market, to where you got to look at both if you're gonna. Well, I guess you don't have to, but I'm looking at both. To accomplish all my goals, to accomplish what I'm trying to do with the rest, in my life is I need those big chunk of change, or I want those big chunks of change, but I also want stability. I want that. I want that life to where I don't have to worry about whether the bills are paid as well.
Yeah.
So, yeah, it's definitely a mixed bag for me.
Yeah. That's why I love commercial, and you can do both. We ended up doing kind of more of the commercial fix and flip model for our first 2. But when those buildings were successful, we then took that money and 1031'd it into a stabilized asset. And now that those buildings are making us money every month, and they're industrial tenants who don't have to call us for anything. So it's awesome.
Right. Absolutely.
Well,
let's find me some of those.
I think that's probably a good pause point for today for recording. We'll pick it back up next week with some sourcing and how to start finding these deals on market.
Perfect.
Sweet.